John Pierpont J.P. Morgan was born in Hartford, Connecticut, in 1837 to a family steeped in finance. From a young age, Morgan was surrounded by money and power. His father was a wealthy merchant banker and even his uncle helped found Yale University. The young Morgan studied in Europe and spoke French and German before launching his own finance career in New York in 1857. His upbringing taught him that personal branding and credibility matter in business. He learned early that strong character was the foundation of credit, a lesson he would carry through a turbulent career. After returning to America, Morgan quickly proved himself a sharp banker. In 1871 he joined forces with Philadelphia financier Anthony Drexel, forming Drexel, Morgan & Company. Their firm financed railroads and major industrial projects. One account even recalls Morgan walking the floors of Wall Street negotiating like an auctioneer. Morgan poured his resources into reorganizing dozens of failing railroads during the 1880s, imposing strict budgets and efficiency to turn them profitable. By reorganizing and merging these lines, he controlled roughly 1/6 of the nation's railroads. This strategy, consolidate, optimize, and profit, defined his approach. With his railroad successes under his belt, Morgan cast his eye on new industries. He financed Thomas Edison and others to electrify America, eventually helping organize what became General Electric. In 1901 he executed a staggering merger. 9 steel companies, including Andrew Carnegie's Carnegie Steel, were combined into the United States Steel Corporation. This $1.4 billion deal was the largest of its day, roughly twice the size of the entire U.S. Treasury, effectively creating the world's first billion-dollar corporation. Such mega-mergers weren't just personal triumphs, they reshaped the entire economy and laid the groundwork for the modern stock market. By merging steel, railroads, and utilities, Morgan literally built the marketplace we invest in today. His massive deals brought together countless investors. Imagine a 1900s version of an ETF bundling assets. Critics like President Roosevelt accused him of having too much power, but many of these moves also stabilized chaotic markets. In fact, through his financing of key companies, Morgan helped build the very infrastructure of Wall Street. Every ETF or mutual fund trader on the stock exchange today stands on the foundation that Morgan helped lay. Of course, Morgan made enemies along the way. He coexisted uneasily with other tycoons like Andrew Carnegie and John D. Rockefeller. In creating U.S. Steel, Morgan famously told investors he didn't want to deal with Rockefeller's iron mines simply because "I don't like him." Rockefeller, for his part, sneered at Morgan's aristocratic style. Yet even a personal feud couldn't stop business. Morgan eventually sat down with Rockefeller's team to finalize the deal, paying $88.5 million for those assets. Around the same time, he even had a brush with fate. Morgan was booked on the Titanic's maiden voyage in 1912 but canceled at the last minute, narrowly escaping the tragedy. In the cutthroat Gilded Age, Morgan showed he would do whatever it took to get the job done, even swallowing pride or defying expectations. Morgan also played the role of American finance's emergency responder. The U.S. had no central bank in the 19th century, so Morgan often acted as a one-man stabilizer. For example, in 1895 he organized a syndicate to lend $60 million to the U.S. Treasury, bolstering the gold reserve. And during the Panic of 1907, Morgan sprang into action. He summoned the top bankers and financiers to his New York City library in October of that year and told them to act decisively. Legend has it he even lit 5 cigars at once in that meeting to show he was unflappable, a dramatic gesture that helped calm the room. Under his guidance, they combined their resources to recapitalize the banks and prevent the stock market from collapsing. After his death in 1913, Morgan's influence only grew. The name J.P. Morgan survived through the decades. His banking house became J.P. Morgan & Company, which later merged into today's J.P. Morgan Chase, one of the world's largest financial firms. In fact, if you have a mortgage, credit card, or investment account at Chase, you're indirectly interacting with Morgan's legacy. His example taught Americans how modern banks and wealth managers operate. Even the U.S. financial system owes him a debt. Lessons from the panic he helped avert inspired the creation of the Federal Reserve in 1913. In short, his legacy lives on in the institutions that shape our economy. Throughout his life, Morgan balanced daring with discipline. He famously quipped, "I owe the public nothing," showing he put clients and principles first. He also insisted that trust was paramount. If he didn't trust you, no amount of collateral would get you a loan. He defined money strictly as gold, cutting through the hype and speculative mania of his day. Behind his stern facade, Morgan valued integrity and saw himself as a steward of the economy, not a gambler. By 1913, his estate was worth an estimated $80 million, over $2 billion today, making him one of the richest people in history. Yet he was always focused on future generations. He used that fortune to endow libraries, museums, and universities, effectively creating his own legacy and retirement plan through philanthropy. Morgan's epic life resonates even with modern personal finance. Think of his railroad and steel deals as 19th-century versions of stock investing and diversifying your portfolio. He didn't chase trendy side hustles. His side hustle was building huge, enduring businesses. Yet his strategy aligns with smart money moves today: long-term investing, like buying a diversified fund, strict budgets during downturns, and steady growth rather than get-rich-quick gambits. He financed homes, through mortgages, and even helped fund government projects, through bonds, essentially laying the groundwork for modern banking, consumer credit, and wealth management. In short, many personal finance buzzwords, from ETFs to loans to retirement planning, can trace their roots back to Morgan's world. And just as Morgan bet on emerging technologies in his day, today's investors might see cryptocurrency as the new frontier of innovation. Today, even if you aren't moving billions, Morgan's story can motivate and guide you. He once said, "Go as far as you can see. When you get there, you'll be able to see farther." That mindset, setting ambitious goals and pushing forward step by step, is the essence of good budgeting and investing. Whether you're starting a small savings plan or buying your first stock, remember how Morgan treated every dollar like a building block of an empire. His life shows that with vision, integrity, and determination, anyone can build wealth over time. This is more than history, it's a finance masterclass from one of the greatest bankers ever.